we give more weightage to that, and we use fixed cost in total, we give more weightage into that. So whenever we start doing our analysis and all the stuff, we will be given in question and all the stuff total fixed cost and variable cost per unit, right? So that is the logic behind that. And of course, there are some you can say cost driver, and okay, we'll talk about what is cost driver and all the stuff. So now we talked about the behavior of the cost, right? The behavior of the cost is changing or behavior of the cost is fixed. So behavior of the cost changes depends on its denominator. So we know the ratio is numerator divided by denominator, right? So the behavior of the cost changes with denominator. In case of fixed cost, numerator remains the same 100, but denominator changes from 1 to 10. Answer is not constant. Answer is different, always decreasing, right? But in case of variable cost per unit, both numerator changes and denominator changes, answer remains the fixed, right? So it means there has something to do with the ratio, with this denominator, or what are the causes of this cost to change or cost to remain fixed. So in mathematical terms, if you know the ratio, so it means this ratio is divided by the denominator. So in simple sense, the cost driver is called denominator. So if denominator is changed, ratio change, behavior change. So we will talk about the activity-based costing in our, we have a complete chapter on that. In coming lectures, we'll talk about that. So if we divide the variable cost in number of units, the answer would be the same, number of text message produced. If we divide the variable cost with number of employees, then answer will be different. If we divide with number of machine hours, number of battery life, and its answer would be different, right? So in this case, which denominator best suits to calculate the variable cost? Of course, cost increases when number of text message sent, not the number of machine hours. Maybe you own the machine for 24 hours, but nobody sends the message, right? Maybe you installed a machine who can send 1 million text in 1 second, but only 100 people send the message, means 100 messages are delivered. So you cannot just divide it with number of like machine hours. It's like that, number of unit produced as well, right? Plus, for example, battery life, because you didn't send the message, so how you can divide it by the battery life? So it means the variable cost here in sending the text message, to calculate the cost of text message, is derived based on number of units of text messages produced or sent, right? So in that case, who is driving the variable cost? Unit produced. So this denominator, we call this cost driver. Who is driving this cost? All other cost denominators or drivers, they are irrelevant, right? We'll talk about activity-based costing when we talk about there. We'll talk about extensively this concept, right? So are we clear about the variable cost and fixed cost concept? Junpyo, Anis, Ali. So up till now, we have different kind of fixed and variable cost analysis, but we will always take per unit variable cost, and we will always take in total the fixed cost, right? So that is the scene here. So now, type of fixed costs. There are two types of fixed costs. Number one, committed cost, and number two is discretionary cost. So committed cost, which is already committed for long term, you cannot reduce significantly, or you can control this cost in short term. For example, CEO salary. You have a contract with the CEO for 2 years. You cannot decrease his salary for 2 years. And after that, maybe you hire a new CEO and you can negotiate. You can hire at lower value. Or depreciation of building and equipment for real estate, taxes and all the stuff. These are committed costs. Discretionary cost, which you can decrease significantly in short term as well. Once you decided, it is fixed. For example, you said, we will spend 100,000 in research and development this year. But after 6 months, you realize, no, I think the budget is too high. Then you change it. We will only spend 600,000, that's it. Right? Or we only spend like 50,000, that's it. So this is called discretion. Discretionary, which is according to your own discretion. You can decide whether to decrease or increase this fixed cost. Some costs are committed. It means you cannot change in short term, and some costs are discretionary, like advertising, research and development, which you have some kind of control. But once they are occurred, they are irrelevant with the output, right? So it means the linear assumption also changes as well. So this is just for like your knowledge. We are not going into detail of mathematical stuff, but just saying that if we have this fixed cost pattern, which is, you know, discretionary cost, sometimes we have increased the budget, sometimes we have decreased the budget. So we can also find out some relevant range. For example, if this is the activity here from 100 to, for example, 200, the rent shows us here, or the cost shows us here, the linear pattern. When activity increased to 100 to 200, the cost increased linear pattern to linear in this range. So we can also say the relevant range. For example, here, if you book office which is from 100 to 200 square foot, your rent will be $1,000, right? But if you need a space for 250 square foot, you cannot take that. Why? Because then you need to book at least 300 square foot of space, right? It means 50 is just wasted. So then you have to pay another 1,000. So you cannot say that, look, I am occupied only 250 square feet, I'm paying 1,500. No, right? Because sometimes the fixed cost is also traveled like in ranges, right? So here, like fixed floor are trending here in 100 square feet. So you have to pay. So you see the cost increase here in relevant range, right? So that's just for your knowledge. And if you don't understand this concept in mathematical perspective, linear curves perspective, so don't worry about that. You will learn in business mathematics over there, the linear curves, the non-linear curves, all those stuff, okay? So let's just skip that. So fixed costs and the relevant range, like I told you here, the same example. For example, assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square foot. So fixed cost would increase in step fashion, 30,000 for every 1,000 square feet additional space required. So it means you cannot hire 1,500 square feet. You only hire 2,000, 3,000, all those. So in that case, in total, it looks like you have a non-linear curve, but actually, if you see the relevant range from on 1,000 units range, this remains like a linear fashion. So this is just a concept for you guys. So we already talked about the behavior of the cost, and that behavior is that variable cost in total changes with the level of activity. And it's a proportional change or increase or decrease. But on per unit basis, it remains the same or constant. Whereas the fixed in total remain constant, it has no effect on the activity range or on any output activity. But when you convert it into per unit, Its behavior changes and always decreases with the activity level or with the production increase in production, right? So we have a quick check here. So can you tell me which of the following costs would be variable with respect to the number of cones sold at Baskin Robbins shop? Tell me. A, the cost of lighting the store. It's variable or fixed?
Variable.
Cost of lightening the store. Fixed or variable? Subhan.
Variable, I think.
See, what is your point of view here? Why you said it is fixed or variable? Because you
Like
are
1 month it can like come, I don't know, $20. Another month comes $30 or something like that.
we are talking about cost of lighting the store. So what is the cost driver here? Whether in 1 hour you sell 1 cone or whether in 1 hour you sell 20 cones. Does the cost of lighting the store for 1 hour increase or decrease depending on your number of cones sold? Subhan.
Isn't it like tax? Like, I didn't understand the question actually.
The question is, which of the following would be variable cost with respect to number of cones sold? So they have give you the cost driver. You have to think the variable cost based on number of cones sold. So in a shop, whether you in 1 hour, for example, 1 hour electricity cost, lightening the cost is $50. In 1 hour,